Evening, ladies and gents. Simon Brown here, joined as always by Njabulo and Nsibande. His video is off because he is struggling with internet, and Steve has already confirmed he can hear us, he can see us. We are winning already, so we'll park that there. Let's get straight into things. If you remember, I've been waiting for my two SA equity trades to close out, and Telkom did just that on an absolute tear. I mean, Telkom has gone completely crazy. This was a trade from the 4th of November. So entry was back here somewhere. Yep, there's about theirs. 39.50 was my exit, which was there. And that got hit on Monday with ease, with absolute ease. Banked about 966 into the account. The Standard Bank one's still live. I have moved my stop loss up a smidgen. Stop loss is now lurking just there at 122.86. I want to leave it to run either to hit the stop loss or to trigger on the target, which in this case, what is target there? 146.50. So still a bit of a way to go for that. But we'll leave it to run. You know, it got through 140 Friday last week. Banks are like, they go sideways and they run and then they collapse and they're sort of going nowhere. As soon as this trade is closed, I'll take that remaining ZAR and move it across into the US dollar account, which is looking lovely. But there's a maybe here, and I'll come to that in a second. Let's look at some of the other trades. I'm going to come to Nifty 50. There's a problem with Nifty 50, which is India. So there's the S&P, which I got into last week. Excuse me, just after the presentation last week. Remember, it was that candle there. I needed it green, and finally it went green on me, and I took the entry. It's run nicely. We're seeing a bit of a pullback today. There are a bunch of holidays coming up. Holidays in China, broadly China, Hong Kong, and then also in the US on Monday for President's Day. But Monday is not a closed market. In the US, it is a early close market. So there will be trading, but it'll just be closing early. And that's across the major exchanges in the US. It'll also impact the Chicago Board of Options and commodities, et cetera, will be closing early. So the S&P looking lacquer. ASX, which I entered on Friday early morning, currently $4 down. It moved, it came back. Remember that green candle was my, that candle there was my trigger. Because it was red, didn't confirm. The other one is the Eurostoxx 50. Same story. There was my trigger candle. There was my confirming candle. It's pulled back. We're at $2 underwater for that. The one that I'm loving, but I'm loving for all the wrong reasons, is my Nifty 50. And what you can see here is a ridiculous amount of profit, $292 and 80 odd cents of profit on that trade. And that's because I got the process wrong. And here's what I will show you. So I went along, I hit buy. It told me pip cost 10 cents. So I was cool, 10 cents a point, no problem. My stop loss is currently 14,557. 14,557 as price. No, 14,557. Excuse me. And I thought that was all well and good. I'm looking to risk $40 per trade, and I thought everything was fine, but it's not even close to fine. And where I made the mistake, well, not the mistake, to where I'm smarter, and that pip cost is more to do with my gearing. It's that number there which tells me what my actual stop loss value is. This trade, under normal trade circumstances, my stop loss is currently $515 away from the current. So call it $220, but that is it's 11% portfolio risk. That is absolutely insane risk. What I need to do to make the stop loss as I would want it, which is $40, I would need to have a stop 40 below where we are now, which is, call it 038. And then you can see there, it says my stop loss is $40 and a cent or something like that. I misunderstood that pip cost, and it means I'm in a trade that is ridiculously over risked. Very, very fortunately, it went the right way. Truthfully, I realized this almost as soon as, in fact, when we were doing the webcast last week, I noticed that I was like making money like alarmingly quickly. We were like $9 up and the thing had hardly moved. And I noticed the problem. What I've done is I've said, look, you know what? I'm in this trade. Let me manage it. First, we get some weakness. I'll cut it and run. Fortunately, it didn't go the other way on me, although I'd noticed it quick, so I probably wouldn't have lost more than $40. And the key point here comes to the point I always say to folks, when you start a new system, spend time in the demo account. And I did spend time in the demo account, but I spent it either in the ZAR equity CFD or I spent it in the currencies. I hadn't spent time on indices such as Nifty 50. So I'm in a horror trade here. It's gone my way, so I'll take that money. When I close it, I'm not going to bank the money into P&L. I'm going to bank the money into capital. In other words, I'm not going to take this and have a giant outsized trade, which makes me a large amount of profit and makes me look like a genius. $300 on a $2,000 account is 15% in one trade. I'm going to ignore it. I'm going to bank it into capital. And then I'm going to probably ignore the Nifty 50 because $1 a point is just far too insane. Quick look at some of the other indices that I'm tracking before we go across to Njabulo. So this is the Russell 2000. It's barreling along, but no signals coming through there. I'm ignoring the sub-indices in Europe or the individual country indices because I'm trading the Nifty 50, sorry, the Eurostoxx 50, which is Europe as a whole. So Spain, I'm not worrying about. France, not worrying about. Ditto Germany and the UK. Hong Kong, again, didn't cross, so we don't get a trade there. Brazil's going sideways. So it moved up, but didn't confirm. It now looks like it might cross down. That is my confirmation candle. If my 7 moving average stays above my 21 and we close above that green candle, I'll enter. Of course, if those moving averages cross, I'll start looking for a short in Brazil. So we'll see how that goes. At the moment, it's a watch and see. China, barreling along very, very strong. This typically happens in China as you're ahead of the new year. Markets start to do some fairly crazy stuff. Australia, we're in, not much happening there. That's Eurostoxx 50. Again, we're long, not a heck lot happening. ZAR 40, South Africa, nice strong market, another all-time high closing level today, but I didn't get any signals. S&P, I'm in, so I'm happy with that. NASDAQ, didn't get any signals on that. We need some reversals on NASDAQ. And then Nikkei 225, which is Japan, which is pretty much same story. Didn't get any signals there. So we shall wait and see. We've got those 4 trades. The Nifty 50 India is a bogus trade. I'll wait for that one to close, or to close it. And that, oh no, wrong one. It's been looking okay. What I'm looking at is it's starting to sort of roundish. And if it starts to get to that green line, which is the 7 MA, 14,900 and change, then I'm going to take my profits, my mistaken profits and run. As I said, add it into capital. Question I got in the week was, these charts look a little different to a stock standard S&P 500 or whatever. Yep, continuous market, so they will be slightly different. Does that make a fundamental difference to my 721 trading strategy? For my eyeball back testing, no. The truth is the best way to work out is to put in $2,000 and then work from there and see. It might give slightly different signals in terms of the crosses. We will see on that. From what I've tested, it's certainly reliable enough and gives certainly signals that count. Question around the 2,000. Yep, there isn't $2,000 in that account yet. I funded it with 900 and something dollars. I forget, 950. I'm waiting for the last ZAR one to close, which is Standard Bank. I'll move that money across. I'll put the Nifty 50 into capital, and then I'll top it up to a 2,000 total amount. A couple of questions quickly coming in. Taiwan Asia 50, not available. So I mean, I'm open to any index. Although there's some here that I wanted to, I mean, so there's some I just actually don't know, and I need to go and dig and see what they are. Some of them are, as I mentioned last week, Nikkei 225 in Australian dollars. That's of no benefit to me. I doing a USD account, not to worry about that. But I'm limited by the availability of the ETF, sorry, of the indices or ETFs that are available here. I'm fairly agnostic, and truthfully, I quite like, Taiwan, Asia 50, Seychelles, not Seychelles, sorry, Singapore, those type of indices, just because I know so very, very little about it. So I really am, in a sense, trading blind, but in the other sense, it's not so much trading blind, it's trading without bias, which is what we want more than anything. And then there were some others coming through in the chat. Nope, yep, chats. Staley, the moving averages, they are 7 and 21, and they are exponential. There is a slight difference if you use exponential, weighted, simple, etc. I always just run with the exponential. I always prefer it. Sorry, Graham, you already had the question. Yeah, so it's 721 exponential. That cross, which happens there, is my trigger to buy. Next green candle, I go long. Cross there was a trigger to short, but we never got a red candle, so then it was null and void. Questions coming through on the Dow Jones. I don't trade the Dow Jones. I think it's a really, really weird index. There it is there. I mean, right now I can tell you, US indices are in bull market. The bull slowed a bit, but if we zoom out a bit, I mean, certainly gone a little bit slower, but those indices are in bull market. In this case, I would be long of it, but as you see, essentially it's going to give me pretty much the same trade from the S&P. Difference, S&P I got in 2 days earlier. But otherwise, it's broadly going to be giving very much the same sort of trade in that sense. My stop loss is, so I don't put the stop loss into the system because I want a close below the 21 moving average or a cross, and you'll get the close long before you get the cross. So what I've done is I've set alerts. And I've set an alert and I've said, if we get an hourly candle closing below the 21 moving average, let me know. And then I keep my iPad open so the alert will trigger on my iPad. And then I manually exit, which is, it's not the cleanest in the world, but it, the 21 is my sort of trigger for stop loss, but not my confirmation. You close below it, I want to be out, but you might touch it and close above it. As an example, that candle there, it traded below the 21, but then let me turn those off. It traded below the 21, but closed above it. Now it's moot because I wasn't in a trade, but if I was, I need to close below that 21. So I assume my stop loss at the 21 MA when I'm position sizing, and it does add a little bit of risk. I'm risking the usual 2% of portfolio, $2,000, $40 a pop. It does mean I might exit a trade at 50 or 60. That's not the end of the world. It's not ideal, but it's not the end of the world. And this has always been the system design. I traded this day trade Aussie futures way back 2006-ish. And sometimes it gets hairy when it's below and it's falling and you want to exit, but you need a close. So you need something to actually happen before you can actually exit it. More questions? Nope. Let's see if Njabulo is still, yep, he's in. Njabulo, don't worry with your video because I know you're struggling with your internet, but if you want to show us your screen and run through trades.
Evening, ladies and gents. Cool. Can you guys see my screen?
Yep, we're good to see.
Perfect. So starting off with a couple of new trades. African Rainbow, if I can jump back to my daily. That falling wedge there, that line was actually, it was there. Entered on that break there, but subsequent to that, it went flat on me, but it had a decent day today. Sitting in profit, tiny bit profit at the moment, but my target is still that height of the falling wedge. And then if we get another 30% break higher, I'll just jump back into this trade. But at the moment, my target is still that 303 level at the moment. Actually, I entered Aspen tiny bit earlier than I normally would have, because I was waiting for that 150 break. So we got a nice bull flag there, and bull flag is one of the setups that I do trade as well. So entered on the break there, still muddling along. On the break of that 150, I'll just then add into this position and trail my stop accordingly. Another trade that I added into was BHP. Added a couple of days ago. I think it was on Monday. On that breakthrough, that bull flag there, target remains the same around that 520. It's actually 542. My target. That's where my target should be for the both for both trades. Capitec is still muddling along, still flirting, and it broke through the resistance of the bull flag. Now it's just trading above it, and I think now it's currently holding a support. And as we break through that 1480 level, I'll pull my stop to 1292 to reduce that risk a little bit more. Coronation. Yeah, I entered on the break here on where the current line is at, and then when it broke through that resistance, the level there, I added into this position. And when we break through 5260, I'll add again into this position and throw my stop and put it around that 46 level, 46.
Njabulo, you have multiple entries, but you keep your stop at the same point, even though they're different entries.
Yes. So when I add into the position, the new trade must give me a better stop than the previous trade, and then in which case I'll put both stop losses at the same level, so that when I exit, essentially it's just one trade, and I'm just adding into the reward side of the things without necessarily adding into the risk side of the things. So I'm still risking the 2% of my equity. However, I'm just increasing on the upside, on the reward side of things.
Gotcha.
Discovery trading very, very well. So I got stopped on that pullback there on Discovery, and it went back below that 132 resistance and rebroke again. And then I just jumped back into the trade. Target is at 156, looking very, very well. And does look like we're going to hit target. And I'm not in a hurry to trail my stop at the moment. Still looking very, very good. Looking very, very, very good. So I have a few levels that I'm looking to add into the position as these two moving averages cross. So this is my 30-week exponential moving average and my 60-week exponential moving average. Perhaps if we break through that 120 level, I'll check if these two have crossed. If not, well, tough for me. If they have, I'll add into this position. If they're not, I'll add as we as we break 137. And I'm sure by then we would have crossed. These two would have crossed. And I think there would be a little bit of consolidation in between that 120 and that 100 Rand level. And I'll keep my stop well out of traffic in the meantime.
Cool.
Gold seemed to have recovered over the past couple of days. And so our gold stocks seem to have found support a little bit there. I'm still holding them. So either target or stop. And hopefully this time I'll get hit for target. But for the moment, I'm still holding the DRD. Another trade that I added into is Exaro. So I entered on the break there, and again, Um, so I entered first on that break, added on that break there. That's where that entry was. And today I've added on that break through that 165. As you can see, that's a healthy uptrend there on uptrend channel on Nexaro. Another one of the oldies is Foschini, doing quite well. Stop well above profit at the moment. But the 30 week is still quite a distance away from crossing the 60-week exponential moving average. So I'm not looking to add to this position at the moment. But at least when we cross that 126, which was support for a while, um, when we cross and close above that 126, I'm sure these two would have crossed, in which case I would then add into this position. My 186 still remains my target, which would be just over 100% from where I entered. Glencoe. So I entered Glencoe on the break. Just pull back there. On that break through was my entry on this break here. I had to wait for the moving averages to cross. As we broke and came back to retest this support, that's when I entered on Glencoe. And we subsequently had a symmetrical triangle pattern, and we broke through that today. And I added into this position just before the market closed, and pull all my stops to that 47.28 level. Target remains 73 as the height of the symmetrical triangle. So initially my target was around 71, but the height of the symmetrical triangle pushes it to that 73. So if I get a new setup and the target for that setup is slightly higher than the target that I currently have, I move all the targets to the new target, to the new take profit level as well. Similarly,
Yeah.
pretty much the same thing that I do with the my stop loss levels.
Yeah, so they become sort of one trade, although they've got many entries. They have the same stop and the same exit at target.
Yeah. And on my trading journal, I manage them as one trade. Actually, I think you guys should check out. I'm not sure if you're sitting Trade Bench.
Yeah. I was
Yeah.
having a look at it. It's really like a little, yeah.
Yeah, you can plan trades nicely here. Some of my planned trades are sitting here, and open trades as well. Managed, all of them are managed as one, and it kind of gives you that equity curve as well. It's pretty cool. I think you guys should check it out. Slightly better than Excel, at least as my experience so far. Because I don't have to draw all the formulas and stuff, and you can set rules, configure stuff, risk and that sort of thing on the platform as well. So anyway, how many seem to broken through that support? Still trading below the support. I'm holding these gold stocks till either stop loss or take profit. Impala broke through that channel that consolidation area there, but I have an entry. So this setup, this breakout didn't improve my stop loss, so I just ignored. I didn't add into this position because I would essentially increase the risk when I'm adding to this position, and I'm still putting my stop loss at that 194. So there wasn't any better place to put a stop. So that's one of the checklists that I have when adding into the position. The new stop needs to be better than the previous one. If it's the same, I let go of that new entry. Monday had so another trade that I was already in, entered on the break. I had a bull flag break there. That's when I entered straight, came back straight down, but still holding above that, I suppose now support, because it came back to test it. It didn't break through it. Came back pretty close again today. the low of today came back to kind of test that former resistance, now support of the bull flag. Yeah, but I'm still holding to either support to either target um, or stop, and I'll be trailing my stop accordingly as the trade moves in my direction. A trade that I've been waiting for a while was Mr. Price. Finally had a break and a good, in fact, a good week so far for Mr. Price. I think we had that break on Friday. Yeah, we had the break on Friday, and I entered just before market close on Friday as well. Northern still muddling along. I'm looking to add into this position as we break through the 216 level. And so one of the key things that I know I exercise when adding into a position, when entering into a trade for the first time, especially if I'm trading the a horizontal break, I'm looking for a 3% break. But then if I'm adding to a position, I just need a close above a certain level, or a close a breakout through one of the setups. But in this case, it's a rise ascending triangle pattern. I'm looking for a break through the 216 level, in which case I'll add into this position as well. Quilter broke out of the bull flag. I missed the entry here, but the stock hadn't run away from me, so the risk reward ratio still worked. Entered into this position, came back to test the what was the resistance of the bull flag. Still, it's held. It hasn't closed below it as yet. My stop loss is comfortably out of traffic. Target. I actually need to update the target. It was mistyped, and as you can see, it's what is this? 30, is it 36,000? I accidentally put 36,000 instead of
okay, that is. Did you typically have ambitious targets? That's taking it to a new level.
Yeah, this was far too much, and I forgot to update it, and unfortunately I can't modify trades when the market is closed. Yeah. But I can somehow drag and drop, and there's no way I'm going to find that price to pull it back down. There's no way that's just not going to happen. I just need to put a note and remember in the morning to update that. So looks like the sellers of Royal Bafokeng that were sitting at around 76 rand stepped away. You know, they had a great week as well, making higher low closes, looking quite lekker. And I think we made a new high. I'm not sure if it's an all-time high. I believe it is.
I think it is.
Yeah, perhaps if I can jump into my weekly. Yeah, it might be.
Yeah.
It might be the all-time high. So we had an all-time high today on Royal Bafokeng. And unfortunately, Royal Bafokeng is not like ShopRite, where all-time high would be news. And
dude, there's so much at all-time highs.
Yeah, even the top 40.
Yeah.
I'm liking this trade quite a bit. I'm actually hoping it's one of those similar trades that you had that 6-year trade that you had.
Oh, in the Indie.
Yeah, in the Indie. So that was my initial trigger there. Confirmation entered at close. Another trigger, confirmation entered the next day in the morning. Another trigger, but it failed. So I had to wait for another trigger there. Confirmed, and then I entered into the trade there. Today we made a new all-time high on the top 40, so looking quite good.
Well, hey, remember we said this index could go to 75,000.
Yeah, and it's
not in a hurry,
like
but not in a hurry, but it's 60,000.
It's going to take a while. It's going to take a while, but 75,000 is quite realistic, and perhaps even beyond. But I'll hold this until this ETF closes below below the 30-day exponential moving average.
Yeah.
Yeah. And if you chart the ZAR 40, you'll see a similar chart, but I just don't like trading continuous markets.
Yeah, that's right. You trade the ETF because you want a 9 to 5, not a 24-hour.
Yes. So we had a lekker break on ShopRite yesterday. I entered this morning on the symmetrical triangle pattern, but I was a little bit cautious on this particular trade. So I entered on the break of the symmetrical triangle pattern, and I entered on half the risk. As you can see, the risk here is 51 Rand, which is about 1% of my balance. I'm going to add the other half as we break through that 150, because that's the key level I was waiting for. So I was willing to risk half of my risk appetite on this breakout. If we do break in further, I'll then add into this position. And if my stop is a bit better, I'll treat it accordingly. Nsibande, another lekker trade. Entered on the breakout. Where's my entry? Where's that arrow? There.
Yeah.
Entered on that break there, added into this position on that break. Perhaps I should now just remove all the drawing tools. I actually entered on the retest of the resistance level, and when it broke through there today, I added into this position, trailing my stop accordingly behind me as well. So another trade that I look to add into it.
Transactions breaking.
Transaction capital broke finally, because just like the Royal Bafokeng trade, there was a bunch of sellers around 25, 26 Rand level. Finally today they stepped away, it broke through, and it closed above the highest place that it went in that during that consolidation. So, which has been better. I'm going to add into this position. I actually saw this quite late when the market was closed. I'm going to add into this position, and I'm trailing my stop to be just below those lows there. As well together. So now my risk is reduced to that 39 Rand. And when I'm adding into this position, I'll take that into account. Other stocks on my watch list is SPAR. SPAR is looking quite lekker. Hey, now I can't type. SPAR looking quite lekker. That giant looks even better on the weekly chart. That giant symmetrical triangle pattern there. I'm looking for a break. Did look like it was going to break just before the close, but came back to close below, which is why we don't preempt trades. So I'm waiting for I'm waiting for it to break through that resistance level there of the triangle. I'm targeting 276 on SPAR, which is just under 50%. And then Woolies is starting to look good as well. In fact, Louis has been looking good for a while. It just hasn't been looking good for me because
your moving averages weren't playing.
My moving averages weren't playing ball. But as we break through what was support, I'll perhaps look to enter into this trade, because they bitterly close from crossing. And my target, I have very ambitious target, 96 Rand.
Dude, I own the stock, so I hope 96 is I'm quite happy with that as an idea.
Yeah. I'm very ambitious with my targets, and I'm patient with my ambition as well.
Okay.
Tiger Brand's looking very good. My two exponential moving average bitterly close from crossing. I think if we cross the 213 and my confirmation 3% higher is that 220 level, these two would have crossed, in which case
they would have moved position over.
And if you look at it, it's a beautiful cup and handle formation there. Damn it. Just yeah. Nice cap and handle. We're now busy forming the handle part of the trade. As we break through and close above the 220 level, I'm gonna jump into. I've been waiting for this for a while now. I've been waiting on Tiger Price for a while now. I've been watching it for a minute now. And last on my list is Balo World, which wasn't on my watch list and it's starting to creep back in as the 30-week exponential moving average is coming closer and closer to cross that's
yeah, gotcha. Yeah.
to the two moving my primary trend is close to actually now turning, so I have to wait for the trend to change first before I can start entertaining trades. So I'm trying to get that bit in the middle. So
Cool.
yeah, that was it from my end.
So some questions coming through. Yeah, do that, share that. Cool. First question is, are these real accounts? Can you start with 5,000 ZAR? Yeah, and that's why we started to think markets, because they had no minimum. So, their com was 0.2, but no minimum. And the no minimum meant that you could start with small amounts. So, and Njabulo, I think you actually started with maybe less than 5,000.
Yeah, I started with 1,000 rand.
$1,000, because there's no minimum, so you don't get killed. At the moment, what Think Markets is doing is basically they're taking their marketing budget and they're throwing it into zero commission. So we don't pay for trades at this point. That won't last forever. But some of a lot of the brokers are also 0.2%, but $100 or $50 minimum means you need tens of thousands. So yeah, these are real accounts, and the no minimum is the big deal. Herman, you ask what's happening to the USD ZAR. It's going stronger. And it's going stronger for two reasons. Foreigners are buying our equity and our bonds, not massively, but they certainly are. And before they can buy those, they have to buy our currency first. But the bigger story is the commodity bull run. As commodity prices run, say you're Implats, you're making 300% more profit. But what you've done is you've got your PGMs in dollars, and you've got to sell them and convert them into ZAR, and that is money flowing again into ZARs out of dollars. And if you look at the sort of first 5 or 6 years of the century, sort of 2001 through to about 05, 06, we saw massive rand strength, and that was largely on the back of a giant commodity price run. And as long as the commodities carry on running, we are likely to see the rand continue to be stronger against the US dollar. There's also the whole point of US dollar weakness. That's a whole different story in its entirety. And is it going to continue? Is Biden in favor of it or not? I don't know. We'll see how it goes. And Njabulo, 2 questions for you. What's your target on Mr. Price? And what is your how much are you risking in the entire portfolio since you got so many trades running? So what's your overall portfolio risk, and what's your Mr. Price target?
So I look at risk on each and on per trade basis. But the highest it has went was about 30%, 40% of my account balance. But I keep it at 2% per trade.
Per trade.
Yeah. So which means I would have to lose 500 times in a row for me to go to zero.
I mean, I know that Alexander Elder he looks at an overall portfolio risk as well, and he caps it at about 6 or 8% or so. My concern is, particularly I'm a system trader, that then keeps me out of some trades. And as a system trader, you expect a lot of losers and a few big winners. And there's always a risk that you keep out of the one that's a big winner. Your target on Mr. Price?
Was Mr. Price? I had it just now. Okay, let me just think it's 2 something. 258.
258. There we go on that.
That's cool. Which was a resistance level when you look at the
an old
chart.
level.
Yeah.
Cool. We'll park it there. Graham, always a pleasure. Ladies and gents, we'll leave it there. Video will be up in a little bit. The email will go out in 24 hours, but you can always find it on YouTube, The Village Trader, and we also publish it on the home page at Just One Lap, so you can find those videos there as they get updated. Njabulo, thanks for your time, ladies and gents. Appreciate your time. Everyone, stay safe and have a good evening.
Cheers, everyone.